What's going on, guys, and welcome back to another video. Today's video is going to be the first part of a two-part video in relation to the 10 best dividend stocks that I feel everyone should have in their dividend portfolio. These 10 dividend stocks will be from a wide array of different sectors, which is great for diversification also. So in today's video, we're going to cover the first 5 of these 10 dividend companies and discuss why I believe these are very strong dividend companies to hold over the long term. But before we get into today's video, I just want to say thanks very much to 217 people that have subscribed to this channel thus far. And if you haven't already, it would be great if you consider subscribing to this channel for more related videos. So for each of the 5 companies that we will discuss in today's video, we will talk briefly on the following 9 topics. What the company is, a brief description of the company, the ticker or stock exchange that the company is on, the sector that this company is in, their current NAV price, a brief look at their financials, their top key shareholders, their dividend percentage, and dividend frequency. Today's 5 companies that we're going to cover are from 5 different sectors. So we got the industrial sector, the healthcare, communication services, the energy sector, and finance. So the first company that I've added to this list is 3M. 3M is an American multinational conglomerate corporation operating in the fields of industry, work safety, US healthcare, and consumer goods. The company's ticker is MMM. It is traded on the New York Stock Exchange. It is in the industrial sector, and more specifically, the industry is the specialty industrial machinery. At the time of recording, their NAV was $165.77. So as you can see from their 1-year chart on Yahoo Finance, since the crash in the middle of March, they have consistently went in an upward direction over the last few months, and they're kind of back to their pre-crisis levels, which is always great to see the recovery of a company. You can see since the crash in March that they dropped to under $130 a share, and they're now back up to just under $170 a share. You can see on screen the company's top 10 holders, and the top 3 are the Vanguard Group with a 7.5% stake, the SSGA Funds Management with a 7.25% stake, and thirdly, BlackRock Fund Advisors with just over 4.5% stake in the company. So 3M pays a quarterly dividend, and their LTM dividend is currently 3.46%, with their forward annualized dividend going up to 3.54%. It is also definitely worth noting that 3M is one of the dividend aristocrats, so it's considered very safe. The second company of the 10 that I'd consider investors to look into when trying to create a dividend portfolio is Abbvie. Abbvie is an American publicly traded biopharmaceutical company founded in 2013, and it originated as a spin-off from Abbott Laboratories. The company's ticker is ABBV, and it is traded on the New York Stock Exchange. It is in the healthcare sector, and more specifically the industry is the drug manufacturers general. The NAV at the time of recording was $91.87. Again, we can see from the 1-year chart on Yahoo Finance that similar to 3M, since the crash in March, it has went in an upward trajectory ever since, and it is currently at the levels it was before the crisis, which is great to see a company coming back again. It has went from lows of under $70 per share in March, and as you can see in August and even the middle of July, it has hit the $100 mark again. In regards to Abbvie's top shareholders, the Vanguard Group is the top of the pile with a 7.87% stake, BlackRock Fund Advisors in second place with a 4.6% stake, and close in third position is SSGA Fund Management with just over 4.5% stake in the company. In terms of the dividend, Abbvie pays a quarterly dividend, and the LTM dividend yield is 4.66%. Again, it is worth noting that this company is also a dividend aristocrat. The third company that I've added to this list is AT&T. AT&T is an American multinational conglomerate holding in the telecommunications sector. The company's ticker is T. It is traded on the New York Stock Exchange. As previously said, it is in the communication services sector, and more specifically in the telecommunication services industry. It employs over 243,000 full-time employees, and at time of recording, the NAV was $29.42. In terms of the company's 1-year chart on Yahoo Finance, unlike the other 2 companies previously stated since the crash in March, you can see that the company hasn't fully recovered yet, and in fact it is kind of trading at half of what it was before the crash. But one of the reasons why I added this company to the list is because I feel this company is undervalued, and as it is a dividend aristocrat, it is considered a safe company over the long term. So if anything, in the next year or so, I expect this NAV to go back up to pre-crash levels. In terms of top shareholders, the Vanguard Group again tops the list at just over 7.5% stake. BlackRock Fund Advisors is in second place with 4.89% invested, and SSGA Funds Management is in third place with 4.12% stake in the company. So AT&T is another dividend aristocrat that pays a quarterly dividend. The LTM dividend yield currently is 6.89%. This equates to just over $2 per share you're getting back in dividend income on a yearly basis. The fourth company that I've added to this list is Chevron. Chevron Corporation is an American multinational energy co-op. One of the successor companies of the Standard Oil, it is headquartered in California and active in more than 180 countries around the world. Chevron's ticker is CVX and it is traded on the New York Stock Exchange. The company is in the energy sector and more specifically in the oil and gas integrated energy industry. Its current NAV at time of recording was $81.93 per share. As you can see from the 1 year chart, pre-crisis the NAV was at over $120 per share and is now down to about $80 at the moment, but it is recovering since the crash, as you can see from the chart since March. Again, in terms of their top shareholders, it's the same three guys on this. So Vanguard Group has just under an 8% stake in the company, SSGA Funds Management has 6.43%, and an under 5% stake is BlackRock Fund Advisors. Again, like the other three companies stated so far, Chevron is one of the dividend aristocrats. It currently pays a quarterly dividend, and the LTM dividend was 5.79% or $4.76. The forward annualized dividend is an impressive 6.27% or $5.16 per share. The fifth company on this list and the fifth different sector is JP Morgan and Chase. JP Morgan and Chase is an American multinational investment bank and finance services holding company headquartered in New York. It is ranked by S&P Global as the largest bank in the United States and the seventh largest bank in the world by total assets, with total assets of a massive $2.687 trillion. The company's ticker is JPM and it is traded on the New York Stock Exchange. It is in the financial services sector and more specifically in the bank's diversified industry, and at time of recording, the NAV was $103.52. The company employs over 256,000 full-time employees. Like all financial sector or banking sector companies, they were hit hard during the crash in March, but have since started to recover. The company was trading at pre-crisis levels at $140 per share, and you could even see from the chart that during the crisis it went down to under $50 a share and is now up to over 100 again, so it's great to see the company coming back from a loss. JP Morgan and Chase's top three stakeholders are the Vanguard Group with a 7.14% holding, SSGA Fund Management with a 4.5% holding, and BlackRock Fund Advisors with 4.3% holding. So JP Morgan and Chase has paid a consecutive dividend increase for the last 9 years in a row. It pays their dividends in a quarterly fashion, and their LTM dividend is 3.26% or $3.30 per share. So with that being said, that brings the end to today's video and the first 5 companies of the 10 that I would suggest any new or experienced investor to look into when creating a stock dividend portfolio that is diversified. Stick around for part 2 of this video that I'll be posting tomorrow, so it'd be great if you could watch that also. And as always, it would be great if you could like and especially consider subscribing to this channel to help the community grow, and comment below on your thoughts and views of the first 5 companies that I would suggest as dividend kings, and if you believe that I am right or wrong, or what you would suggest in alternative stocks to put into your own portfolio, and if you have any of these companies in your own portfolio as of now. Thanks again, and I will see you guys in the next video.